Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings and try to find out if something is really alright or if it's time to panic. Today we're looking at SmartKem Inc. would be wanting a word with them. Stick around to find out why. Before we dive in, if you like getting the real story behind the financial reports, make sure you subscribe. And if you want to chat about these numbers with other finance fans, join our Discord community, linked in the description below. So SmartKem Inc. has filed a Form 8K, which is basically a current report filed when important company events happen. The big news here is about their stock listing. It seems like Nasdaq, the stock market where SmartKem's shares trade, has sent them a letter saying the company isn't meeting the requirements to stay listed. The specific issue is about the company's financial health, particularly their stockholders' equity. You know, that's like the net worth of the company after you subtract what it owes from what it owns. Nasdaq has a rule that companies need at least $2.55 million in stockholders' equity to stay on the Nasdaq capital market. As of August 15, 2025, SmartKem was in the red. Their stockholders' deficit was $127,000. That means they owed more than they owned, which is not a good look for a publicly traded company. They also didn't meet the other ways to avoid this problem, like having a certain market value for their stock or making a good profit. Now, this doesn't mean their stock is going to disappear overnight. Their shares can still be traded on Nasdaq for now, but SmartKem has to come up with a plan to show Nasdaq how they'll fix this deficit. They have 45 days from August 15th, so until September 29th to submit that plan. If Nasdaq likes their plan, they might give the company up to 180 days, so until February of next year, to get their finances back in order. If Nasdaq doesn't accept the plan, SmartKem can try to appeal the decision. But even if they appeal, there's no guarantee they'll be able to meet the requirements or even keep up with other Nasdaq rules down the road. The report is signed by Barbara C. Keck, the Chief Financial Officer. It's her job to make sure the company's financial house is in order, and it looks like this is a really tough challenge for her right now. So what does this all mean for SmartKem? It's a clear signal that the company is struggling financially. Their equity being in the negatives means they're not in a strong financial position. This could make it harder to borrow money, attract investors, or even operate normally. Plus, the risk of being delisted from Nasdaq is a big deal. Delisting can make it much harder for investors to buy or sell the company's stock, and it can really hurt the company's reputation and ability to raise capital in the future. It's like being kicked out of the big leagues. They have to prove to Nasdaq that they can get their house in order, and that's a big hurdle to clear. Now, looking at these numbers more broadly, a stockholders' deficit of $127,000 indicates a significant financial challenge for SmartKem. This isn't just a small hiccup, it's a situation that directly impacts their ability to remain listed on a major exchange. Imagine your credit score dropping so low you can't get a loan. It's a similar kind of problem, but for a business on a much larger scale. Their future hinges on convincing Nasdaq with a solid recovery plan, and even then, success is far from guaranteed. Alright, that's our breakdown of SmartKem's latest filing. What's your take on these numbers and what they signal for the company's numbers and what they signal for the company's future? Do you think they can turn things around and stay on Nasdaq? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.